Turn off the music.
Oh, so we had music? Oh, that's amazing.
Well, I don't know. I could. From visually, it says there's music. I don't know if it was actually saying.
So let's play it because we still have some time. Test it out.
It just beats in the bag.
Hello, hello. I see people joining in. Guys, this is a tax strategy Q&A for business owners. You can ask any question. We're testing the sound right now. Testing. You can ask any question. Oh. Hi, be truthful. Stick around. We're gonna be starting very soon. Give us 5 minutes. Stick around. Let us know if you can hear the music in the chat. Yes. Okay, nice music. Thank you, June. Okay, so as we are getting ready to start, please.
Yeah, introduce me.
Yes. Okay. I think. Huh? I think last week it was just we had some things. I think Satra, we can start.
Okay, great.
Yeah, because we have some people watching, and we can start. Okay, guys, if you have, first of all, welcome to the tax strategy Q&A for business owners. I don't think we are, huh? Oh. Are we live?
Yeah, we're live.
We're good? Okay, because I guess it's lagging here. I got it now. Okay, hello to everybody. Welcome to the Tax Strategy Q&A for business owners. We have, I'm Mariana. This is not Boris, but this is Nick.
Hello.
If you missed
Boris
it,
is right here. Hello.
Boris is right here.
We got a beautiful small studio. Can I somehow, let me go into there. I don't know who set up the studio. I'm kidding, it was me. All right, let's go. Thank you, Nick. All right, is this for me?
This is for you.
Okay, perfect. All right, cool. What else we got going on here?
Guys, while you are coming in, whoever is here, please say hello. I see a hello from Jay Monel, Eduardo.
Right, we're not selling tumblers, I promise you.
We're not selling tumblers, but if we can save you $100,000 in taxes, you can get one.
Yes, and join our 100K plus club.
Yes.
We have exclusive business owners that actually save $100,000 or more. Are we good? Did we introduce Nick? Do you see us okay, Satra? Yeah. Okay, very good. All right, cool. Oh, Mariana, your sister's watching live. I have to behave. Look, the whole family watching live. Okay, guys, this is Nick. He's one of our senior...
I don't think this is on.
Is this on? No, this was not on. Is the audio good?
It's good. Sorry. I'm going to be moving back and forth, so I don't.
Guys, so the way this works...
Satra, the audio?
The way this works is
Testing.
if you're a business owner and you have any question that you would like Boris or Nick to answer, I think Boris is going to introduce Nick right now.
Yes, Nick is our
Reintroduce.
senior tax advisor. By the way, he works with a lot of business owners that are 7 figures or more in profits, okay? Saves them a lot of money on taxes. So you guys are actually lucky to have him on this live. And we're going to have him answer some of the questions as well. He did tell me he's not nervous for this at all. So we did not put him on the spot. Okay,
Exactly.
very good. Do we have some questions coming in, Mariana? Can you tell me,
still-
what am I looking at here? This is
I
the...
thought you wanted to look at yourself.
this is from the...
This is from Instagram.
Instagram, so it's more like
Yeah,
streamed.
yeah,
Okay, perfect.
yeah.
This is perfect. Okay, good. Cool. I don't know if you have any questions
We
coming
don't
in.
have any questions. Guys, first of all, please ask your tax questions. If you ask your tax questions, you could be entered into a raffle to win a free tax strategy session consultation With Boris.
No, actually today we're raffling off something else.
What are we
I've thought
raffling off?
about what a lot of business owners really want. And we're going to give them a free RCR analysis, okay? A reasonable compensation analysis. So we have this software that we use. We pay a lot of money for it, okay? And this software basically produces a salary, a proper salary, a reasonable compensation that you should have for yourself as a business owner. It's actually backed up. It's like IRS approved, whatever it is. Like, it's really, really cool. It gives you a really cool report. And today, we're going to be raffling that off.
I like that.
Yes, I was thought about it.
That's good.
My calendar is full. I can't do any consultations. So yeah. So I'm like, how can I get creative and still give something good away? But
So
all right.
guys, please ask your tax questions, because there's the only way to get
Yes,
that is if you ask your tax questions.
I do want to talk to you guys about a couple of things. First of all, where are we? Okay, perfect. So, PTET tax changes for 2026, okay? So, 2026, a lot of business owners think, and their accountants tell them, hey, I don't think we need to do PTET for you because with the passing of one big, beautiful act, the SALT cap went up to $40,000. From instead of you being able to deduct only $10,000 on the personal taxes, you can deduct $40,000, so you don't need to do PTET, and that is not true. Okay, I'll explain to you why. So now, starting 2025 tax year, you can deduct from your personal taxes $40,000 in state income taxes, property taxes, and state income tax on your W-2 income or on your business income, okay? Up to $40,000. The rest is not tax deductible. Here's what a lot of business owners don't know, and a lot of accountants actually have not looked into one big, beautiful act and to see that the $40,000 actually drops to $10,000 after you reach of what's called a modified adjusted gross income of $600,000. What is a modified adjusted gross income? It's just a fancy language to saying your gross income, okay? $600,000. So ladies and gentlemen, PTET tax strategy is still very strong for you and your business. I don't know how many business owners we have. Well, we should have all the business owners here. If you're not utilizing PTET tax strategy, you should. Because New York State, and I believe New Jersey, and I believe Michigan, I'm not 100% sure. Nick, let me know if I'm wrong here or not.
You're right.
Is due March 15th, right?
It is.
Michigan as well?
Absolutely.
What other states are due March 15th? Do we
Those
know?
are the three main ones.
Those
New
are
Jersey's
three-
a little bit flexible throughout the year. so
New
you
Jersey is flexible,
You
right?
can do it as long as you submit a payment throughout the year.
Yeah. So you have to make an election for PTET. You basically have to raise your hand and say, hey, I want to pay this tax, okay? California is due June 15th along with many other states, but you have to make your quarterly estimated tax payments for PTET. So again, ladies and gentlemen, even if your income is under $600,000 in your business or total overall income, still do PTET. It will not do any harm to you, okay? And those accountants that I was speaking to, I coach a group of accountants every Thursday in a certain network, and they come in and ask a lot of questions, and one of the tax questions came up. The strategy is like, hey, my tax people, right, my team members, they don't want to do PTET for our clients because they're saying the cap went up to $40,000. I'm like, I'm like, don't worry about it. Continue doing it. It does not hurt you, okay? So for those of you that don't know what PTET tax strategy is, I actually have a lot of content on YouTube about it. And we're releasing a new video next week, I think, on the PTET changes for 2026. Marianne, do we have any
We
questions?
do. We have a
right.
question coming in from YouTube from Jay Monell.
Okay, Jay Monell. Hello, Jay.
Do you work with people in other countries? I think that or just New York.
I think,
you
meant
mean states.
other states. Yes, we have right now tax advisory clients in more than 40 states. That means all these business owners in all these states, we save them help money on taxes. We do tax planning, advisory, and strategy for them.
It's Jessica.
Okay. Oh, you said Joe. Oh, it's Jessica. Okay.
Jessica.
So yes, it's not only New York. We happen to be in New York, but we and all of our team members are in our New York office. Okay. And but we work with clients in 40 states and plus. By the way, Jessica, I don't know how new you are to S-corporation strategies, but can we put up on the screen, we got a free PDF.
I actually have it right here. Where did
We have it somewhere. I don't know. It is 7 tax write-offs every business owner must know. You guys can go to 7taxwriteoffs.com. You guys can get it there as well. All right, what else we got, Mariana?
Oh, she said I meant states and countries. So
Yeah.
with states, yes.
Countries. Yeah, we try to stick to U.S. taxation only. That's at least our specialty. Okay.
I have a question from Instagram from Dr. Jen.
Hello, Dr. Jen.
As a psychologist doing work virtually, making around $800,000 a year, is there anything else that I can deduct as a home business expense other than supplies and a home office?
So I want everybody to pay attention to this question, right? So she is a psychologist, right? I'm not even going to attempt to write that. I don't know how to spell that. Okay. So here's the thing. This is, by the way, true for everybody that's working from home. So this is true for consultants, coaches, right? Psychologists that work from home virtually, where you do a lot of consultations over Zoom, telemedicine, whatever that may be. Your margins are probably very, very high. If I had to guess, Dr. Jen, your margins are probably about 90%, okay? So what that means is that the 90% of 800,000 is you take home, so $720,000. And you're like, hey, are there any other strategies, are there any other deductions? The answer is yes. So if you're a psychologist working from home virtually, I'm guessing you don't have employees that are on a W-2, so please confirm that in the chat, okay? So what you can do is maximize your solo 401k, okay? 401k. Before I even talk about solo 401k, I want to ask you if you have an S-corporation. If you don't have an S-corporation, this will probably be the first thing that you want to set up. S-corporation is very, very beneficial for small business owners in majority of the states. Some states have some rules and they have an extra tax for an S-corporation, such as New York City. Okay, not a state itself, but New York City. I believe Tennessee as well has some taxes on it, but generally speaking, S-corporation would be best for you. If you don't have employees, take a look at solo 401k. All right. Also, if you do have an S-corporation, is your reasonable compensation, how much you're paying yourself, is that reasonable? Are you overpaying yourself? If you are, then you're overpaying in payroll taxes. By the way, we have a raffle that anybody that participates today with asking questions, all you have to do is just ask a question. We enter your name to win a reasonable compensation report analysis. We usually sell it for like $200 online, I think, but it's yours for free. Okay? Cool. Does that answer her question? Does she have a follow-up?
Don't know, but does that answer your question? Are you still with us?
Okay, cool.
Guys, if you have any text questions, drop them in the chat. June says, great question. Jessica was saying she was asking for Israel, but that just to chime in where she was, which country she was relating to.
Yeah, there's a lot of...
Dr. Jen says thank you.
You're welcome, Dr. Jen. So there's a lot of people that, for example, like you said, you were asking for Israel. A lot of people that live in Israel, but they're U.S. citizens, but this could be true for other countries as well. They live in other countries, but they're U.S. citizens. Some states have, some countries have a reciprocity, whatever that is. This is not something we specialize in, or I personally specialize in. So we stick to U.S. taxation for U.S. residents that live in the United States.
I have a question from Molly Glenn on YouTube.
Okay.
Could you touch upon dividends after reasonable compensation?
Okay, great question. So Molly, okay, she's asking Boris. So
Please keep the questions coming.
yeah. So Molly says, can you talk about dividends after I take out a reasonable compensation? So before we explain that, let's kind of walk through a very quick scenario example. Reasonable compensation, generally when somebody says reasonable compensation, we're referring to an S-corporation, okay? So we have an S-corporation owner that takes out, let's say, $100,000 reasonable compensation. So let's say they did the report and they spoke to their tax advisor. If you don't have a tax advisor, your accountant is probably not telling you this, okay? So $100,000, excuse me, $100,000 in reasonable compensation. So I'm going to put RC next to it, okay? Then there is a profit from the S corporation, and let's just say it is $300,000, okay? These $300,000, when you take it out of your S corporation, these are considered distributions, okay? But they're not necessarily dividend distributions. Well, they are and they're not, okay? Because in the traditional sense, dividends are usually taxable, okay? This would not be taxable. Why? Because let's say, for example, your profit is $300,000, and out of the $300,000, Molly, you only pulled out $200,000. I don't know. You decided to buy yourself a Ferrari. I don't know. Whatever floats your boat, okay? And now you're left with $100,000 in a business account. What do you pay taxes on? You still pay taxes on the $300,000, okay? The $200,000 that you took out as a dividend distribution, this is not a taxable dividend because S corporation is a pass-through entity. I hope this clarifies, and let me know, Molly, if this is clear. All right,
So-
what else we got?
We have a few questions. So you just mentioned, like, if you're not working with a tax advisor, probably with your accountant. So there's a question that came in. Maybe you can answer it.
Sure.
The question is, I'm curious as to why a tax professional wouldn't tell their clients about any and all legal tax strategies.
Okay, so there is a question as to why, I'll just sit down for this one. I don't need to use the board on this one. So there's a question as to why, say it again?
Why wouldn't a tax professional inform their clients about any and all legal tax strategies?
So this is a very tough question. Well, not really a tough question, but like, why wouldn't a tax professional inform a business owner of all the legal tax strategies? Because it depends what type of a tax professional you hire. There's tax professionals that are in a different fields, right? So you guys would know, right? So we have a tax preparer, then we have a tax advisor. Who is a tax preparer? Just because somebody is a CPA or an EA or has like 17 other licenses after their name, it doesn't mean that they specifically specialize in certain field. Even CPAs and EAs, they may just be tax preparers. They do their taxes, they do a great job, they complete it, they file it, they speak to you based on the questions, on the documents that you submit. Then there are other professionals, they're called tax advisors. This is who specializes in tax strategy. And that is a very different line of business in that industry. Like our line of business is having a tax advisory firm. That means we're built in a way where we learn the tax code, we study the strategies, and we bring it to the clients and we educate them, okay? Other industry of the tax field is like tax preparation. They collect your documents, they file your taxes, make sure it's on time, they invoice you for each form that they file. That's done. These are two different things. So a lot of business owners, when they start off their business, they start off with one accountant, smaller accountant because it's all that they can afford, and all of a sudden this business owner does really, really well. Now, if you live in America and you know what you're doing, like your business will kick off, right? Like I know a lot of successful people that have done very, very well for themselves in a business, but they have outgrew their accountant. Because the accountant doesn't do this. The accountant was hired initially to file their regular taxes. Okay, that's the biggest difference. So once you start reaching certain income limits in your business, even when you start making $200,000 or $300,000 or $400,000 in net profit after expenses, you're probably overpaying taxes because you're not working with a tax advisor. Does that answer the question, Marianne?
I think so.
Okay.
That was good. You just mentioned that, so I just thought that, because that question was asked also.
Doesn't mean the preparers are bad either.
No, it doesn't mean that the preparers are bad. Exactly. Like sometimes I do the content and I say, if you have a tax preparer, you don't have a tax advisor, you're overpaying in taxes. It's not to say that the preparer is bad. It's just to say that it's not preparer's job to save you money in taxes. At the end of the day, here's a story, right? So we had a certain client. She was with us for a couple of years, and then the time of renewal came, and she's like, "Look, Boris, my business did not do as well," and she didn't renew. Okay, but we actually know her from the community. She's a good friend of mine. She calls. Well, I don't know if she's a good friend of mine, but we're not real friends. We just know each other, right? Anyways, she calls me and she's like, "Hey, Boris, can I get an advice? I just found myself a tax accountant who's gonna do my taxes. Can you give me an advice?" I'm not sure. And she explains to me that this person is charging like a couple of $100 to file business and personal taxes. I mean, if somebody's charging you $500 or $600 to file a business or personal tax, it's guaranteed. There's no strategies, there is no advising. It's just give me documents, let me put in some numbers, and that's their job, right? Like you said, it doesn't mean the preparer is bad. It's just like this is what they do. They have hundreds of returns, a couple of $100 they charge from each client, and that's their job. So if you want to save money on tax and you're doing very well in your business, then you need to get yourself a tax advisor. Right, Nick?
Absolutely.
That's it.
I have a question from June.
June.
Can you take the BUH if you also have an office?
BUH?
Yeah, I thought you would know.
No, do you know what BUH is?
BUH. It's a therapist who has an office and also works online, so it would be two different spaces. Is it
Can you read the whole question again?
Can you take the BUH? BUH.
No, who is this from?
June.
Uh,
June, if you would like
back to June, right?
it's someone else. It's a different person.
I didn't have it before?
No,
Okay, so,
this is from YouTube. That was from Instagram.
okay.
If you would like to call in, you can also call it in. If you want to speak to Boris.
Yes, we also have a call-in. Do we have the phone
I
here?
have the phone.
Do we have
the
a phone number? Oh, the number is on the screen.
The number is on the screen.
Okay. Do we have other questions?
Yes, I have a question from Miriam. For an LLC, S corporation, 2-member, that's not making high.
A what? A foreign LLC?
No, for an LLC,
Okay.
S corporation, 2 members,
Okay.
that's not making high or consistent net income to issue W-2 wages. What should I do? Do I
Great question.
do I
Okay.
revoke the S corporation and elect something else? And can I elect S corporation again? I guess can I re-elect?
Okay, guys. So we have a situation going on with Marianne, right? So she is an LLC that chose to be taxed as an S corporation. Okay. So for those of you that have an LLC, but you think, oh, that's it, I'm an LLC, I cannot be an S corporation. That's not true. You can be an S corporation. You just have to make an election of filing form 2553. Exactly. Okay. So that's what you do. So Mary made an election. There's 2 members. That means there's 2 partners, 2 S corporation owners that are receiving a K1. Okay, a K1 is basically showing their share of profits and expenses. Okay, now she says, Boris, our income is not consistent. So do I need to pay myself reasonable compensation? Some months we don't have a salary to pay ourselves, and should we revoke our S corporation? No, do not revoke an S corporation, because when you revoke an S corporation, you may trigger some unnecessary taxes. Okay, that could happen. And the second thing is that once you revoke it, you cannot go back to being an S corporation generally for about 5 years. So I wouldn't recommend revoking. But what I would tell you is that you do not need to pay yourself a consistent salary. As long as your reasonable compensation by the end of the year equals that amount. So let's say, for example, your business has a profit of $300,000 and your reasonable compensation should be $100,000. But your $300,000 only came in December, for example, for whatever reason, right? So you pay yourself a reasonable compensation in December. But what if your total salary, what if your total net profit, for example, was only $80,000? Okay, but your reasonable compensation should be $150,000. Does that mean you pay yourself with the money that the business doesn't have? No, you can still pay yourself less than $80,000 in profit as a salary. So speak to your tax advisor how to do that. But no, do not revoke S corporation status based on the information that you give me. I wouldn't recommend it to my clients. I would take you off the payroll that is consistent and pay in the months, like especially for the seasonal businesses. Certain seasons it's high demand. That's when you can take out payroll, or towards the end of the year, just make sure you balance it out. I hope that answers the question, Marianne.
Okay, so June says BUH is business use of home. It's an acronym I use.
Oh, excuse me. Okay, who is this, June?
June.
Okay.
Thank you, June, for your question, and thank you for being on here to clarify.
Okay, so what was her original question?
Can you take the BUH?
1 second, let me.
Now we use this acronym.
BUH, business use. Can we just say a home office?
Home office. I
Oh
can
my
say
God.
that.
Make it fancy, say boo.
Boo.
Buch.
Okay, what's the question? Can we use business?
Can you take the BUH? Can you take the home office deduction if you also have an office? This is from a therapist who has an office and also works online.
Can you
So-
explain that, Nick? You want to do this one? Let's go.
You can, yeah.
No, can you? Oh,
Can I
sure.
explain it? You
Yeah,
want
sure, answer the question for Miss June, because She already corrected me, so I don't know if I want to answer. I'm joking. We're gonna let Nick do this one.
It's different when you're at the board.
Yeah, I know. Good luck.
Guys, I had a lot of fun writing on the board before.
I hope I do it
So the
right.
question is, can you take a business business use of
yes.
basically right a home
Yes.
office deduction even if you have another office?
So, quick answer, yes, you can. Even if you have an office, you can definitely do it. What you would do is you'd reimburse yourself under something called an accountable plan. Sorry for my handwriting.
Is it worse than mine?
It's like chicken scratch. I apologize. It's,
Okay.
essentially, some of the things you wouldn't be able to take normally for your home office, you can take through this accountable plan. You just have to measure your business space relative to your home size, and then you can go ahead and do this. You can just reimburse through it. This is something that we can help you set up. So if you have a tax advisor, speak to your tax advisor. They'll walk you through this process and just show you how to reimburse this. But yes, you can.
Cool. Thank you, Nick.
No problem.
All right. We have other questions for
Make
Nick.
it easy, just
So, Tax Clinic says, LOL, I am a CPA and EA, and I was like, what is BUH? You put us all on the spot.
It's boo.
Question from Vanessa. I don't know if you can hear me, but
Okay. Let me read the question. Where is it?
You read the question. Here you go.
Hello. If I have an S corporation, I have physical office. Can I still claim home office deduction? I feel like it's the same question, and that
It is,
answers your
yes.
question.
yes.
Yeah. So by the way, I just want to let everyone know, Nick, you can come join me on camera here for a second. This is low chair. Did you bring it up this low?
No, I had it low.
Yeah.
Yeah.
It probably
I
doesn't
like to be
even
a little
work.
bit higher.
We have a furniture that doesn't work in the office, and the arms are chipped off.
You know, that's because that's usually my chair.
Oh, you use such a chair?
I guess I do. I mean,
Can I buy you a new chair?
be my guest, yes.
Okay.
Please?
I was
Yeah,
joking.
I-
Actually,
I-
it's
I
not in the
don't-
budget.
I don't complain, you see. I take what I'm given. And I just passed it over to Nick and took another one by accident. I didn't know.
That's okay.
I thought she was pointing at me when she said, "I don't complain. I take what I'm given." I thought you were pointing at me. I'm like, "Oh, it's a chair." Okay. So we have a really good question from everybody. Actually, they're asking, "Can I still take a home office deduction when I have a physical location as an S corporation?" What Nick answered you is 100% right. I think you answered more of a question how you can take a deduction of using an accountable plan, but to answer the question, can you still do it, and why are you allowed to deduct a home office while you have a physical location? Like, for example, if you're a physician, medical doctor, attorney, okay? And the reason is, if you take a look at the IRS tax code and you kind of read through it, I'm not saying you should, but there's something that's called administrative office. So if your home office qualifies as administrative, that means that you do most of your administrative stuff at home. And a lot of business owners that we work with, they do. Whether you're an attorney, a medical professional, whatever that is, you do your billing, you do your bookkeeping, you do your other things. Like, I'm an accountant. We have an office here, a pretty big one. And I still do all of my administrative work from home. Like, I do my own bookkeeping, I do the invoicing. Everything that's administratively related, I do it from home. And because it is an administrative home office, it is now a primary location, so to speak, and that is why you can deduct it as a home office expense. Now, if you're an S corporation, you have to reimburse yourself through what's called an accountable plan. Okay, it's basically a piece of document that you keep in your records. You don't have to file it with the IRS, but it allows you to reimburse yourself on a monthly basis for your home office expenses. Cool. Did I answer all the questions on that at least?
I think so. You did
Business use.
kind
In
of
order to
that.
write off the home office monthly, do we have to fill out the IRS form every month or calculate the totals, take the percentage, and form that year end? Yeah, Molly, I think I answered that question.
Yeah. Okay, we have a question from Angelica. We have some questions coming in from Instagram. Okay, so Angelica is saying, so when you said you take the profit, do you mean making a check for yourself, or is that the draw
answer that question.
distribution? And how much can you get
Thanks.
for shareholder distribution?
Yeah, so Angelica is asking a follow-up question that we had on a I think it was this question right here. Okay, I think Angelica is asking a follow-up question on Molly's question. Hey, I have a profit of $300,000, and what was the question? The distribution?
The distribution
Yeah,
question?
no, from Angelica.
Just how dividends are treated. And she's asking how much can you take?
Oh, you can take out all of it as a distribution if you want. Oh yeah, she's asking, is this only how much you can take out? No, it's once you pay yourself a reasonable compensation, you can take out distributions however much you want. But sometimes what could happen is that you may trigger what's called excess distributions. You take out more money than there is in a business. For example, if your profit was 200, but you took out 300, how can you take out 300 if the profit is only 200? It could be either you had the money sitting there from previous years, or you have some loans for an S corporation that could possibly trigger some excess distribution. So when you're taking out very heavy distributions, what I tell my clients all the time, hey, you have enough basis, but when you do want to take out some distributions, just give us a call first, clear it with us, and most likely it'll be a yes, but at least we'll know that there's no excess distributions. We'll confirm that.
Okay, June says, thank you. Timber says, 30% of our house is, are you ready for the next question?
Yeah, I am.
Timber says 30% of our house is for business. We write off 30% of mortgage interest, utilities, and cleaning. Do you agree with that? Our business is administration as well as crafting and shipping. June also says that's awesome, and thank you for clarification.
You're welcome. So,
and they do this via an accountable plan.
Okay, very good. Amazing. So Timber says, look, Boris, we use 30% of our home for home office, which is, by the way, is an unusual number. And you asking in your question, do you agree with that? I sense that your accountant is not agreeing with you. Okay, so let's just kind of go through the rules. Who is allowed to deduct the home office, and when are you allowed? The thing is that it's not only administrative, but also exclusive, right? So, for example, what business did she say she's in?
They are, 1 second.
So,
administration.
Oh, they're in administration. So, I don't know, that looks like more like an office clerk type of business. So, what I was going to say right now is that you can have an office in your home where you do all the administrative work, and then let's say you have a lot of inventory that you need to store, and you're using a certain 1 or 2 rooms in your home which take up the percentage exclusively. That's cool. Now you're saying if you're in administration business and you're using 30% of your home for your home office, what I'm guessing from here is just like 30% of your home is exclusively occupied for the business use of a home.
Oh,
again,
they are writers and artists.
They are writers and artists.
Who uses 2 garages and whole basement.
So there you go. So that answers your question. So if you use 2 garages and a whole basement as artists, and that is 30% of your home, just back it up, make sure you have documentation and proof, and you're good to go.
Yeah, he says we had to push our accountant for this.
You had to push. Maybe you should switch your accountant. Okay, next question.
Question from Aida.
By the way, I just want to let everybody know, I saw we have a lot of people here. For those of you that are asking questions, you will automatically be enrolled in a raffle. And we do a free reasonable compensation analysis for you, okay? We usually sell it online for like $200. It's yours for free. If you have an S corporation, you want to determine what your reasonable compensation should be, we're going to send you that link. We're going to set you up. It's very easy. It will not take more than about 20 minutes of your time to complete the process, and you have your reasonable compensation. For those of you that are new to my channel, please go ahead and subscribe. Every week I release a YouTube video that teaches you, the business owners, how to save money on taxes. We also have this free resource, which I think the link is on the screen. 7 write-offs that every S corporation owner must know. Okay.
Yeah, you can go to 7taxwriteoffs.com.
Yep.
And you can download your copy.
All right, let's go. Next question.
Question from Aida.
Aida.
Do you need to pay yourself, or can you go a year without getting paid as an owner?
So Aida said, can you pay yourself, or can you go 1 year without paying yourself? So there's 2 scenarios, right? Scenario number 1, you're an LLC, not S-corp. And you are an S-corp, okay? So if you have profits in your S corporation, you should pay yourself a salary. I'll tell you why. When you file an S corporation tax return, this is Form 1120S, okay? There's line 7 on this, and the line 7 is officer compensation. If this box is blank, there's a very high chance that your tax return will be pulled for an audit, and then all the distributions and all the profits you had, for example, will be basically added back as if it was a salary. So we want to avoid that, okay? If you're an LLC, that is not an S corporation, you're not really paying yourself a salary. There's no salary to pay yourself, so I wouldn't worry about it when you pull out the money out of the LLC. But with an S corporation, once you're an S corporation and you're profitable, there is a compliance that you have to do, which is pay yourself reasonable compensation.
She also has a follow-up question.
Who, Aida?
Yeah.
Sure.
For a six-bedroom RCFE. Do you know what that is?
RCFE,
Yeah.
6-bedroom. People using the acronym SKIP.
Yeah, that will employ 3 employees and will be making around $60K a month. Is it a good idea to do an S-corp or just a regular LLC?
If you, let me tell you, if you whatever, I don't know what RCFE is, but if you're making $60,000 a month, then yes, S corporation would generally be a great option for you. I'm guessing if you're going to have profits in that company as well. So definitely speak to your tax advisor about that.
A question from Buddy from Instagram. I reside in NYC and would like to know if an S corporation is best for a small business under 200K.
So if you're a New York City resident and your business is in New York City, for example, well, forget the fact that the residency. Let's take a look at New York City a business in New York City with a profit of $200,000. Most likely S corporation is not going to make a lot of sense to you, okay? You have to speak to your tax advisor because the calculation for being in New York City or not has gotten a little more complex with qualified business income deduction being in place. That's number one. And PTET, because New York State does not allow PTET if you're a single member LLC. It only allows for partnerships and S-corp. So it may be beneficial a little bit, or maybe it's will be break even. So honestly, I would say speak to your tax advisor because I don't know the rest of your situation.
Oh, so Aida says RCFE is a senior living facility.
I see. $60,000 a month, I would imagine you would need to get an S corporation. Aida, I would like to know, do you have a tax advisor that can do this for you? Please let us know in the chat. What else we got, Mariana?
We have a question from Tax Clinic. Correct me if I'm wrong. If you use actual expenses by square footage and claim depreciation, you have to recapture depreciation as ordinary income when you sell your home. I'm referring home office deduction by square footage.
I didn't hear a question there. We'll continue.
Okay. Arbens is asking from Instagram.
Okay, by the way, we have Adriana Jez asking, how can I get in touch with you? If you guys want to get yourself a tax advisor and you're interested in speaking to us about what that looks like, just go to taxplanningcall.com. Again, taxplanningcall.com. We have a lot of business owners that we work with, and many business owners also save $100,000 on taxes. As you guys see, it says, I saved $100K on taxes. You may join the 100K plus club, so you can also check out save100know.com. That's save100know.com. to learn how business owners save $100,000 on taxes. So yeah, but if you want to get in touch with us, that would be either that link or taxplanningcall.com.
Question from Arbenz from Instagram. What is the main reason for choosing a C corporation versus an S corporation entity?
Okay, let's do it. So it's Arben, right?
Arbenz, A-R-B-E-N-Z.
Arbenz. Okay, it says, what's the difference between...
What is the reason for choosing a C corporation versus an S corporation?
Right. Okay, cool. So we have an S corp and we have a C corp, right? So what is the reason one will choose either or? So, by the way, I love C corporations. Okay, even though you see a lot of my content about S corporation, S corporation, S corporation, I love C corporations, but when do I use them is a different question, okay? If you are a small business owner, and I'm talking about, it doesn't matter how much money you're making, okay? If you start making, well, whatever that is, right? Let me stick to what was asked. What's the difference? And then we'll talk about when to use either or, okay? S corporation is number one, it's a pass-through entity. Pass-through, okay? That means no tax on business profits on a business level, okay? No tax, business level. Okay? Only tax you only pay on the personal level. C corporation is not a pass-through. That means there is an entity tax, okay? So there is a business tax of 21%. Now you might say, well, Boris, 21% is better than the personal tax, which is the maximum 37%. And you are right to question that, right? There's a difference of 16%, but you pay taxes on a business level. And then you pay additional dividend tax for taking distributions, okay? The dividend tax could be 20%, up to 20%, plus there is a 3.8% additional Medicare tax, which is really brings it up to about 24%. So if you combine these two alone, it's 41% compared to this. So usually small business owners do not want to be a C corporation because there is a double tax. With an S corporation, there is only one tax. It's not to say that the C corp is a bad entity to use. What we do for our clients, we start exploring C corporation options when they have $2 or $3 million in profit in their S corporation. Then we look into how can we make an S corporation, a C corporation, another entity to which we're shifting income to a lower tax bracket. But of course, when you're shifting income from an S corporation to a C corporation, like I've seen some business owners just form a C corporation and bam, transfer $800,000. Oh, that's it. I transferred it. I will pay tax only in 21%. No, that's not how it works, and it's not how it should be. It has to have a legitimate purpose. There has to be a purpose for why you formed this C corporation. There's certain compliance rules you have to follow, okay? Because IRS tax code actually talks exactly about this, where people cannot just do what I just told you to do, okay? So get yourself a tax advisor. You set it up properly. I've done a lot of research on this for one of our clients and actually learned a lot about it myself and how to do this properly. So speak to your tax advisor. If you're like $2-3 million in profit in your S corporation, can you also set up a second business as C corporation, especially if you're thinking about exiting your S corporation in the future? There's certain ways you can do where C corporation can help you with that exit. What else we got, Mariana?
We have Caleb Acuna here. Remember, guys, a tax advisor is not the same as a tax preparer. Thank you, Boris Tax, for being in my corner.
Let's go, Caleb. Caleb is actually one of our tax advisory clients.
Yes.
Right? He's Terry's? Yeah. Do we do bookkeeping for him also? No? All right. I thought you would do because you, we should? Yeah, whatever, listen. We at Boris Tax don't do bookkeeping, okay? Even though I said we do CFO advisory, okay? All right. All right, cool. What else we got, Mariana?
June said, thank you. She just had to go. My accountant, Jay Monell, says, my accountant never told me I wasn't supposed to be on payroll as a single member LLC. Can I still elect corp status, or am I better off being just an LLC and taking draws?
All right, I'll answer that question. Great question, by the way. And I do have a hard stop in 10 minutes. So guys, if you want to enter that raffle to get the free reasonable compensation report, ask your questions. For those of you that want a free PDF, 7 tax write-off every S corporation must know, the link is on the screen,
Yep.
7taxwriteoffs.com. Mariana, can you read the question again? This was from who?
This was from Jay Monell. It was Jessica.
Oh, Jay Monell. He asked. Oh, that was Jessica, right?
Yeah.
So, Jessica, what is she asking? By the way, this is a great question. She said that, let's go ahead.
My accountant never told me I wasn't supposed to be on payroll as a single member LLC. Can I still elect a corporation status, or am I better off being just an LLC and taking draws? By the way, Aida says, no advisor yet, starting to set up the business, but I will contact you for advice.
Yeah, Aida, I think this free PDF will also be a great resource for you, and also our YouTube channel will probably help you. Like, I've had a lot of business owners that learned so many strategies just watching the YouTube channel. Like, we get messages all the time from them, like, I've used this and I saved money on taxes. One person actually commented on one of our YouTube channels, said, because of you, I now have a better relationship with my accountant. Okay. All right, cool. So she says, I'm a single member LLC. My accountant never told me I could become an S corporation and draw myself a salary. Is it too late? So Jessica, it's not too late. You have until March 15th to file form 25, thank you, Nick, 2553 to become an S corporation. If you pass this deadline, right? This is for this year, for 2026. If you pass the deadline, you can still file this form, okay? It's just called late election. your accountant or hopefully your tax advisor, what am I writing here? Sorry guys. A late election, okay? Your accountant would file Form 2553 with a certain language, and 99.9% of the time we've seen IRS approve it, okay? Approved late elections, even if you do it after 3/15. But then your question is like, well, does it still make sense for me to be an S corporation? The rule of thumb, generally speaking, for most states, I don't know what state you're in, if you're making $100,000 in profit, then I would advise you to become an S corporation. I've seen a lot of accountants say if you make $50,000, $60,000 in profit, that used to be true until tax laws changed by a lot. We have a QBI, we now have a PTET, and all those stuff actually plays into effect. So in our firm, we tell our clients, hey, 100K in profit, S corporation makes sense.
She was also, I'm not sure if you answered the question. She's asked, how do you calculate your basis?
This is Jessica.
Yeah.
So Jessica is asking, how do you calculate your basis? I'm guessing you're referring to an S corporation basis, okay? So guys, basis is one of the most important things in your S corporation, and that's called, I'm just gonna write it, it's called shareholder basis, okay? And who should keep track of this for you? Your accountant, okay? Really, your accountant should keep track of it. We have a lot of returns, we receive new clients, and I'm like, where's the basis calculation? Like, I don't even know what that means. I'm like, there's like a loan to shareholder. Did you like take out loans from the business? Did you give loans? I don't know what is going on, right? So yeah, I know. So just simple terms, okay? Let's say year one, you started the business, you put in $5,000 into your business. So that increases your basis, okay? That means your equity, the skin in the game, like I like to call it, okay, is up by $5,000. Then you, by the end of the year, let's say the year was over, okay, you had $100,000 in profit, okay, that increased your basis, okay, it's a very simple example. So now your basis is $105,000 and you decide to take out $80,000 distribution, okay, so you took $80,000 distribution and your basis decreased in the S corporation. So now you're left with $25,000 in shareholder basis, okay? That's your skin in the game, like I like to call it. Next year, the same thing will repeat. You have net profit that will increase it minus any distributions that will decrease it. Jessica, I hope this answers your question.
Question from Vanessa.
Vanessa, okay?
Can I deduct the mileage between my home office and physical office?
So Vanessa is asking, can I deduct miles, right? What's the standard mile? I don't even know what standard mileage rate is these days.
I believe it's still 76 cents a mile.
Oh, it went up to 76?
Yeah,
Man, I've been out. 'Cause all of our clients, we use the actual deductions, right?
Yeah,
But like,
it's more.
It's more, yeah. Yeah. So she's asking, so can we, is it safe to say 76 cents? Can we look it up? Can we look it up? So miles, right? So she's asking, can I deduct my travel between my home office and her physical office, right, Mariana? Is that what she's asking?
Sorry, 72 and a half.
72 and a half. Okay. So 72 and a half cents per mile. Mariana, what was
Yeah.
the question? If she can deduct
Mileage between home office and physical office.
Right. So let's say she traveled 1,000 miles this month. Okay. So that's what $725, right? That would be the deduction. So can I deduct this if I travel from my home office to my actual location? Well, that depends. Does your home office qualify as administrative office? And if it does it meet all those rules, like I said, to qualify? And yes, it would be. So definitely speak to your tax advisor and you can reimburse yourself through an accountable plan.
Question from Dr. Jen. We kind of went through it in the beginning of the live, so I don't know if you want to go for it again. What is the benefit of having a CPA versus an accountant/tax preparer? Oh, I guess it's a different question. CPA versus accountant tax preparer.
Yeah. So Nick knows this, right? So Nick is our senior tax advisor. And Nick, are you a CPA?
I'm not, no.
Okay. Nick, are you an EA?
I'm not, no.
No. Okay. And I tell you, Nick probably knows more tax strategies than many CPAs and many EAs out there. Not saying that CPAs and EAs are bad. I'm a CPA, right? I've built my practice as a CPA. I started off as a CPA, but I was not a tax strategist when I first went into this field. Mariana, my wife, knows, right? I used to work very late hours as a tax preparer, just that.
Very late hours.
Yeah. And then when I decided to start my own firm, I've learned about tax planning, and I decided to learn about tax strategies. So the difference between there's no such thing as a difference between CPA and a tax strategist. It's just a difference between an accountant that is just a tax accountant, just a preparer, and somebody who's a tax strategist. I'm a CPA and a tax strategist. Nick is not a CPA and a tax strategist. We both know same strategies. We work together, and we use the same strategies for our clients. It's all a matter of who you work with. What is their professional status, and what type of a service do they provide to the client, and do they know what they're saying? Unfortunately, the market is now being saturated with tax advisors or tax strategists, where you come in, it's like, oh yeah, we can do tax advisory and strategy for you. As a matter of fact, we get some clients who come to us and say, yeah, I spoke to this accountant, he said he's going to give me a tax plan. They gave me a tax plan. I didn't understand anything about it, and that's because they use some software to prepare it and say, oh, you can use these strategies. No, work with somebody who actually builds customized tax plans for you, like we do. Like Nick, you just did a kickoff call for a big client yesterday, right?
I did, yeah.
And I looked at the tax plan because I got a notification that you've kind of completed it. And I looked at it, it's like he's already like over $600,000 in savings, right? Did you was it like, it was customized to that person's situation, right? It was not like a software spitting things out. Like, we go through questions and all of that stuff. So that's really, so you want to make sure you pick yourself a competent tax advisor.
Yeah, and it makes sense. So you're building a relationship with that tax advisor because everybody's situation is different. You know, so yeah, you can have a software spitting something out to you, but just because it sounds right doesn't make it right.
We also don't just give it to you, we implement it for you. So it's
right, we implement the strategies, right?
Piece of paper, it's actually putting it into work for you.
Yep. Cool. All right, what else we got? Are we good?
Yeah.
We're good to questions?
I think
How much time
so.
do I have? Oh no, this is perfect.
Yeah.
All right. Thank you guys. Me and Nick are gonna step out, and Mariana is going to
Guys,
do the raffle for a reasonable compensation.
we had a lot of questions today.
Did we?
I think so.
Quite a bit.
We have.
I am a little bit out of breath, to be honest with you,
Drink some water.
because we're also recording some content before this, right,
Yes.
Satra? Yes. Oh, they can't see you. Our
they can't.
it's our camera guy.
But today was good, guys. When you're asking questions, that's good.
Yeah.
Maybe they wanted the RCR more than they wanted the
Should I stay for the?
strategy.
You know what? I'm gonna watch you do it because I've never seen you do this. It's like, what is it? The Wheel of Fortune TV show.
Vanna White.
So listen, Mariana apparently,
Yeah.
right? So she, how old were you when you watched that TV show?
I
Wheel
watched
of,
it all my life. Like it was something we did during dinner.
Yeah.
My grandparents.
and it's like she always wanted to be on Wheel of Fortune, and now she
I have
actually
my
made it a
own
reality for her.
wheel. Thank you.
You are. I make your dreams come true. And Nick is like in between. He's like, you guys want to get a room? No. Okay.
No. See, look, it's a full wheel.
No, they can't see it yet. All right,
Oh,
you
they
ready
can't
to
see
go?
it, But we can see it.
You ready to go up there?
Yeah. Let's
Who's
go up
gonna? So
there.
who presses to spin?
I press it
From where?
from there.
Okay, so go for it.
All right. I just have to figure out how I'm gonna get there now.
You go around, and I'll go there. Yeah.
Okay.
Can we? Who do we request? Who do we speak to? Yeah, you can move on to that chair, maybe. Yeah. Who do we speak to request an upgrade on the studio?
Big step.
Mariana, who do we speak to get an upgrade on the
I don't know,
studio?
but if you just had to see the loopholes I had to jump through just to get around here, we need a bigger studio.
Okay,
Anybody
ma'am.
want to sponsor it? I don't
Okay,
know.
ma'am. Okay, давай, let's go.
Okay, guys. Are we gonna spin? I don't take long. Like, you know how when you're doing your webinars, I just spin it. 3, 2, 1.
Oh, make it exciting.
I know, but you're usually not here.
All right, who is the winner?
Oh,
Arben.
Arben's watching, and it was Arben. I got a correction over there. It's Arben from Instagram. Congratulations, you won a free reasonable compensation analysis report.
Yes.
So please get in touch with us. You're gonna send an email to boris.musheyev
Should I put
at
it in?
borismtax.com.
He's on Instagram, right?
Yeah, this is on Instagram.
Oh, he actually. Okay, let me.
Are you still watching? If you're still watching, Boris is looking.
Is it Boris? What's it? Boris.
Boris.musheyev at borismtax.com.
Okay. Done. Okay.
And just reach out to us and we will send that over to you. Now put this on your calendars. We're going to be live same time next week, 3 o'clock. And bring your tax questions and make it fun for Boris.
Thank you, Mariana. All right. Listen, we don't want to be on a hot